And there it is, the closing bell on the New York Stock Exchange. After what was a relatively strong start to the day, just take a look at where the numbers ended up. It was up and down, the Dow Jones ending relatively flat, only up about 130 points.
That's right. The S&P 500 and NASDAQ saw similar results. They ended flat as well. We are joined now by Ahmed Riesgo. He is the Chief Management Officer at the wealth management firm Insigneo. So tell us, what was driving the market today?
Really, the market's been trading for the last couple of weeks in kind of this trading range, and it's really looking for a reason to break out either to the upside or to the downside. Some people had pointed to the FOMC minute release today. I don't think we learned much. It's also really old news. I think potentially we might have a catalyst here with the employment report coming out on Friday. But really, the market's just looking for a reason to break out of the range that it's been in since December 19th.
And for the uninitiated, you're mentioning the Federal Reserve releasing the minutes from their previous December meeting, which is why you're saying, okay, it's not really new. We also have what appears to be a little bit of gridlock on Capitol Hill. Is there just no one main driving factor we can identify at this moment as we begin a new year?
Actually, I think we're going to have to look overseas. We've actually had some really good inflation prints coming out of Europe, France. Earlier today, we had some prints out of Spain and Germany, and we're seeing that the inflation picture in Europe might not be as dire as we previously once thought. Some of that data has come in relatively benign. So what we're seeing is that there's been some pullback in hawkish expectations out of the European Central Bank, which is the equivalent to the Fed here in the United States.
Oh, that's very interesting. I wonder if that might affect what we see coming from the Fed in 2023. Obviously, they're looking at our sets of data and making decisions based off of that. But I'm wondering if you have any predictions that.
Yeah, look, most of the high-frequency real-time data that we look at are already pointing to strong signs of disinflation throughout the U.S. economy. Now, that has not caught up to the government data that will be reflected soon. But let's take, for an example, the shelter component of CPI, which is something that a lot of people have been pointing to that has been relatively strong and is showing elevated levels. If you look at more sort of real-time data from apartments, Zillow, these kinds of surveys, we're seeing that rents are already coming down throughout the country. So it's only a matter of time before that's reflected in the official government data.
Yeah, one of the things so many renters are happy to see after so many years of rents ticking up, especially during the pandemic, with so many folks at home. Ahmed Riesgo, thank you very much.
Thank you.